Hi, this is Darren from Macquarie Warrants Singapore and welcome to another episode of Macquarie Warrants Market View. In this series, hear firsthand from Singapore's investment strategies as they share their views on markets in the coming weeks. For this episode, we have Con Hao, Director of Wikipedia and SGX Academy trainer, who will share his views on the broad markets.
In our earlier video at the close of March for S&P Index, we identified a reversal up signal for the midterm position, and since then the market has been higher. However, in our even earlier video at the close of March in this quarterly chart, we observed a peak may have established and cautious a challenging 2020 despite a market rebound. It seems like at the close of the third quarter, a false break has been identified and the fourth quarter remained challenging. There is a market divergence both fundamentally and technically. Fundamentally, the Wall Street and the Main Street differs, and technically, if to include indicator, we will see divergence as well. Whenever there is a divergence, this means we must invest and trade very cautiously, especially on the upside. Even the Hang Seng is resisted by this strong resistance established in 2008, and this first quarter and third quarter closing indicating weakness. Similarly, Nikkei has been resisted at slightly above 24,000 since 2018. The first quarter closing isn't that encouraging as well. Thankfully, there are derivatives like structural warrant to help me to manage my positions in this time of uncertainty. Stay safe and have a profitable weeks ahead, and always have a measured risk.
I hope Con Hao's insights have provided you with actionable strategies to trade the current market. Investors keen to trade short-term moves in these indices may consider doing so via warrants. Call warrants move in line with the underlying they follow, meaning if the underlying stock or index went up, so will the call warrants. Put warrants move inversely from the underlying and will increase in price when the underlying stock or index falls. As volatility flows back into broad markets in November, global stocks went on a massive rally following a considerable pullback in the last week of October, despite stimulus talks being pushed back and possibly new lockdown measures introduced. The US stock market shrugged off all pessimism and traded towards its historical highs. After bottoming out at around 3,200 points on 30th October, the S&P futures have since gained 8% to close at 3,480 points on 6 November, 5 PM Singapore time. Over the same period, the S&P call warrant VQEW that's traded in Singapore dollars on the SGX saw a 125% gain, while the put warrant IQZW fell 40%. This magnified move in warrants is due to the effective gearing feature embedded in warrants. A warrant's effective gearing figure refers to how much more a warrant may move in response to the moves in the underlying they track. If a warrant had an effective gearing of 10 times, it means the warrant will move around 10% for every 1% move in the underlying share or index it tracks. The gearing effect is one of the reasons that make warrants popular, but notes that gearing can work both ways, meaning warrants will also move in a bigger magnitude or percentage change than the percentage change move in the underlying should you get your view wrong. Similarly, Asian stocks benefited from the global rally. The Hang Seng Index, which has been lagging behind major indices in the share price recovery since March, surged 7% for the week to trade firmly above the 25,000 level, despite the suspension of the Ant Financial IPO, which was due to list midweek. Equipped with a 20 times gearing, the HSI call warrant saw gains of a whopping 127% in the week. The Nikkei 225 index also enjoyed a week of gains, increasing 6% during Singapore trading hours. The trending Nikkei call FIQW rose 131%, while the put UAFW fell 37%. Benefiting of the gearing effect in warrants, 5 investors made returns of 20 to 35% within a week and was each rewarded with a $1,000 cash prize in our Leverage Your Trading Returns to Win contest. Join us on Telegram and Facebook as we will be sharing their astute trading strategies and how they have seen magnified returns by trading warrants. To estimate how much you should be investing into warrants, you can also use effective gearing as a guide. As an example, for a shareholder with 100,000 worth of XYZ shares in a portfolio and wishes to hedge against a short-term downward move in the shares, can consider a put warrant. If this put warrant has a 10 times gearing, the shareholder needs only to invest into the put warrant an amount that is 10 times less than his share exposure of 100,000. That is, the XYZ shareholder can buy 10,000 worth of this put warrant. For further details on trading warrants and to find out if you're qualified to trade warrants, click on the link in the description or feel free to contact us at our warrant hotline. Lastly, don't miss out on the next video and exciting warrant news by subscribing to our channels on YouTube, Telegram, and Facebook.